So you're thinking about buying a home in Roseburg. Well, can you really afford it? A lot of people here in Roseburg think that buying a home here could be a bargain. Some think prices are outrageous. Well, like any town around on the West Coast, all the prices are outrageous. With the rising home prices, the high interest rates, and the job market, can you really afford to buy here? In this video, I'm going to break it down and compare what you need to be able to buy a $250,000 house or the median sales price home of $350,000. So with that, let's get on with the video. Hey everybody, I'm Jerry Norman with Oregon Life Homes. I've been selling real estate here for the last few years and I absolutely love it. I get all different kinds of calls, texts, and emails from people just like you looking to move to this area or that are already in this area and looking to buy their first home or their second home or whatever. Everybody's got a lot of questions, so if that's you, leave me a question in the comments, give me a call, text, email. I'd love to hear from you. But with that, in this video, we are going to break down what you actually need as income to be able to afford a home here in the Roseburg area. So in Roseburg, currently, at the beginning of 2025, the median sales price is right around $350,000. Now, that doesn't mean you can't get a house more or less. That just means that that's the average median sale price. So let's break that down for a $350,000 house. And then we are going to compare that to a $250,000 house, which would be your entry-level home. Though the $250,000 homes may need a little bit of work, but there are a few around, so we're going to get into that. First off, for a $350,000 home, you're going to need a 3.5% down payment if you're going the FHA route, and that'll be just about $12,000, which would bring your loan amount down to about $337,000. And with today's interest rate at 6.5% or 7%, your monthly payment is going to be between $2,500 and $2,700, which includes taxes, insurance, and mortgage insurance. Now, for a $250,000 house, your down payment for that same 3.5% is going to be just around $9,000, which would make the financing amount right around $241,000, bringing your estimated mortgage payment at about $1,800 to $2,000. Now, lenders want you to stay right around the 30% debt to income ratio for housing. Well, what does this mean? This is how much that the lenders say that you should be spending on your house, and they want you to have more monthly income other than just your house payment. Most of them won't lend to you if you're not making that much money, and this is where the qualifying comes in. So what do you need to be able to afford a $250,000 house? What do you need to afford the $350,000 house? Well, for a $250,000 house would require a household income of $70,000 to $75,000 a year, and that is to stay within the 30% debt to income ratio. And for that $350,000 house, that household income, you're going to need to have about $90,000 to about $110,000, give or take. That's pretty much the bare minimum to be able to afford these homes. So obviously the $250,000 house is more affordable. You're not going to get the luxuries as you're going to get in the newer homes. So, I mean, if this is your first time buying a home, it's not going to be your forever home. You are going to be paying more currently than the current rents are. However, you are building wealth. I understand that in Roseburg, the average salary right now is right around $50,000. So the only way this could work if you have a significant other where you guys can pool your money together for that household payment and both qualify for the loan. A lot of times this is really tough because of that lower salary makes it very difficult to buy homes. And that salary makes it difficult to be able to save for that down payment for one, and then the closing costs on top of that and the inspection costs. So this is going to be really difficult for a lot of people to get into their first home. And I understand that the affordability right now is really difficult to be able to buy a home in Roseburg. However, there are ways to get around those down payments. Currently, there's some really good options. There's the Oregon bond, there's a USDA loan. These are all loan options that make it easier for first-time homebuyers to get into a home. A lot of times, your out-of-pocket expenses for your down payment and your closing costs can be almost nothing out of pocket and to get into your first home. And that's going to be for these $250,000 homes for the most part. But it is a good way if you are starting to think about it, about getting into your first home. I'm working with some buyers right now where they are getting into their first home, and the home is 220,000. It's not the greatest home, but it's livable and it's financeable. And they're using the what's called the Oregon bond, and getting their closing costs paid by the seller. Their down payment is not coming out of pocket; it's coming out of this Oregon bond. So they are coming out of pocket hardly anything out of pocket. I think they just paid for their inspections and their appraisal, and that was it. They're a young couple, so they have the opportunity to be able to build into this home and make it a great home, and then in a few years be able to sell it probably for more than they paid for it. That's a great way to build wealth. Property and utility costs on that home. So we already determined that your mortgage payment would include your property taxes. And your property taxes in Douglas County range depending on where you're located, but it's right around 1% of the assessed home value. And then utility costs, those are all about the same, $150 to $250 a month for your utility costs. That is going to be about the same for both homes. Now, your everyday expenses and your basic cost of living. So groceries here in Roseburg are about on the national level. If you were up in Portland or a larger city, your grocery costs are going to be a little higher. But here in Douglas County, it's about the national average. And then for your transportation costs, gas right now in Roseburg is at about an average of $3.80 a gallon compared to like 4.30, 4.40 up in Portland right now. Your transportation costs are a little bit better here in Douglas County. However, I do understand that these are all costs that weigh into your monthly budget and could potentially make your mortgage payment unaffordable. I understand that. And it all depends on what career field you're in. If you're in the medical field, obviously the average salary is going to be a little bit higher, and hitting those affordability rates is probably going to be a little bit easier, even though still when you're making just enough to be able to make that mortgage payment, it's rough. And then if you have a significant other, it can ease that pain a little bit. So basically, to break it all down, to be able to purchase a $350,000 house, you're going to be wanting to make about $100,000 as a household income, and then for that $250,000 house, you're going to be wanting to be right around that $75,000 household income. So it is possible if you compare that to the average income in Roseburg. I know it's difficult. A lot of the wages are definitely lower than the average here in Roseburg. I do understand that, and being able to save up for those upfront costs can be difficult. But there are ways around that, and it all depends on your specific situation. But I'm happy to help if you have any questions on this. My first time home buyer guide is in the description below. Also, my relocation guide. Both have some great information in there. If you have any questions or any comments, feel free to leave those down below. And if you got some great information out of this, hit that subscribe button. I put out these videos all the time. I'm happy to help. If you have any questions, give me a call, text, email. I'd love to hear from you. Hopefully you got some great information out of this, and watch these other videos. Talk to you guys soon.